Welcome back, YouTube. Are you afraid yet? I hope not, because we've been talking about this. We've been looking at all the catalysts, and we've expected these entries and these prices for quite some time. So let's get into what's going on today. We know that the world is on fire. The CPI numbers came out. They were absolutely terrible. The Dow, the NASDAQ going through the floor. Bitcoin went down to 28,000. Dogecoin, 7 cents. They're threatening to do 50 basis point hikes for like the next 2 terms. Mortgage rates are spiking. Where does it all stop? Let's talk about it. And before I get into crypto, I wanted to take a look here at the macros because this is really important. What you're looking at right here is pretty much the national average on mortgage rates. And what you're seeing here is a monster of a reversal that's taking place here, primarily because of how expensive money is becoming, because they're pretty much raising the interest rates here to try and absorb some of this inflation. So that little arrow, that line that you see that is pretty much going parabolic, that is going to be pretty much the reason that we see these rates. We were down to an historic low. This chart goes back well past the 80s, and we see that what the average rate was and the rate that we got down to, and now we are literally just blasting off to the moon. The mortgage rate chart that we're looking at here, that's what everybody wants their portfolios to do. We want that moonshot, but unfortunately, it's happening in the housing. And this is going to be a domino effect. This pool of liquidity that's pretty much being squeezed out of the market, this is going to tumble over. This is bigger than the stock market and the crypto market. This is going to hit the housing market as well. So for those of you that were trying to get housing or investment properties and stuff like that, you're going to have a great opportunity coming up here if you have the cash or if you can qualify for a loan, because those are going to change, obviously, with these as the economy changes. But if you can qualify, you're going to be able to get some great entries in real estate. Just watch out for those variable interests. We see that a couple of days ago, I talked about the apex of pretty much the wedge that we were operating in. We got our 2 tests, and the CPI numbers pretty much less than 48 hours later broke the apex that Dogecoin was in, and is now trended, or broken trend basically, and is now outside the apex, as you can see here by this red bar that is below the apex line here. So pretty much that trend now is invalid, and we are setting a new trend. I often receive questions about what do I think about the cycle that we're in. Is it possible for us to get the breakdown? I've always believed that it's possible for us to go down. That's why I had the initial floor at around like 6 cents. As we got that breakdown here, and as we see the shorts are now coming in, and then literally the market falling apart, we're going to get some pressure on those lower levels, especially now that volume is relatively low. This is going to be an opportunity here for shorts to kind of come in, and they're going to build up that pretty much that higher high on the shorts as well. And they're going to use this to try and drive prices down. And this isn't limited to something like Dogecoin. You're going to see the exact same thing in Bitcoin. Bitcoin is I'm looking at it now. Well, right now it's 29,164. It went down to the high 28s today. I still believe it's entirely possible for us to get to $20,000 Bitcoin. So there's a lot of room left for the liquidity to run out of the markets. Consolidation points and stuff like that obviously are going to be different for each coin. Buy-in points, the communities, where they view things as oversold, that's going to be a big point. And to the point that I made yesterday, I was stating that the volume, or the low volume that we're seeing here, this is just people becoming more in tune with the market and the macros going around it. So they're not just simply saying, oh, it's a dip, buy the dip. Oh, it's a dip, buy the dip. Now they're becoming more in tune with the catalyst. And when we have major news like the CPI numbers, or literally the economy is falling apart, people see the inflation, people see the gas prices, people know that, okay, something's not right. So they're going to look for better entries instead of just, oh, it's a dip, let me buy. And I believe that's a lot of what's going on right here, because now the question is, it's not a matter of, oh, this is a dip, let me just increase my position. The question is, okay, well, how long can this go, and how bad is this going to get? This is kind of like the juggle of, okay, how low and how long that people are dealing with here. Because if they buy in, yeah, I have a great entry, but how long do I have to wait? How long is this price locked in? Because we know that a lot of people aren't necessarily long-term investors. They'll typically, if it dips low enough, they'll typically over leverage themselves, and they'll need that money back a lot sooner. So going forward here, especially now that we've broken trend here, and we are now at 756, going forward here, and with the way that Jerome Powell is pretty much acting, I've stated that we cannot have any faith whatsoever in the Fed's ability to handle what's going on. Jerome in general has been wrong for pretty much the last 7 months straight. Transitory, 0.25, no higher than that. Putin did it, 0.50, and literally just behind inflation the entire time. And so now you're going to see massive aggression going forward here. I'm probably expecting 0.50 basis point hike each time right now. And this is pretty much going to, what we were afraid of initially in like March, April, was the question was whether or not they were going to rug pull the market. And they were literally trying to save the market and not be aggressive early on. If you guys remember in some of my state of the market videos, the one with the American flag behind it, I talked about all the macros and them pretty much not being aggressive enough early on. And that was going to lead to a situation like this. And here we are. So this is pretty much the consequences of literally trying to save the market and not rug pull it to be aggressive enough early enough. So to really get a grasp on the market. So now you have to make up and pretty much do double time on the back end. And so pretty much where it's getting our rug pull now on the market, this is going to be a really turbulent time for all markets. Now, the crypto market, the stock market, the housing market right now. I know mortgage lenders, people that are looking to get in and looking at these mortgage rates. This is going to be a really turbulent time for investing and where to put your money. And I know a lot of times people see these videos and you'll see big pump coming and it's kind of stuff like that. But you have to look at the macros, and that's not aligning with the big picture. So when you're looking at these, just kind of be careful and be prepared that when you make your entries, be prepared to hold, because the macros are saying that this is not over. And and I've said this a million times, but until we solve the macros, that's not going to reflect in a bull run. The market doesn't go on bull runs when there's fear and uncertainty in the market. And there's a lot of fear and uncertainty in the market right now for good reason. So you have to keep that in mind when you're making these entries. Make sure that you're not over leveraging, or that you're able to put the money in here and hold out until some of these macros are resolved. With that being said, let's take a look here at the shorts for Dogecoin, because as I was talking about yesterday, you will see positions where people who are short in positions, it's another way to make money, right? So when there's mass fear in the market, shorts are a way that you can pretty much turn nothing into something. You don't necessarily have to buy in right there, right at that moment. You're using leverage, futures, margin, whatever. You're able to turn nothing into something. And when there's low volume, especially if you're trying to get a coin lower and you haven't really closed out all of your short positions, that is a perfect time to strike, because you're not competing with the full amount of force that you were earlier. So it's going to be easier for you to get more price action in the downward direction with the same amount of shorts. And this is what I meant by I'm expecting for shorts to put a new higher high in positions like Dogecoin. And as you can see, we are above the 200-day moving average. We're above the last point of pretty much the consolidation of shorts, where we were trended at the 200-day moving average for around 200 days. We're around in this range. And we see that they closed out a small position, came right back immediately, and we have another green candle forming right here, pretty much indicating that, we're about to set another higher. We're about to set a higher high on the short positions, because they want this coin lower. So as far as for short-term price action, be prepared for them to try and get this to test that 6-cent line, which is pretty much the area where we got that concrete, that really strong flash crash bounce from last time. Be prepared for them to try and get it down there to test that support level again. I have no reason not to believe that the markets are going to be completely red and bloody again on Monday. So when we're looking at this, I say Monday to Wednesday, when we have like these, I know crypto trades on the weekend, but when we have these types of price actions, when you have that fear coupled with the additional markets at the opening of next week, be prepared here for them to see another big green candle here in these shorts, to potentially try and get down to around that 6-cent level. There's a lot of incompetence that's going on in the market. There's a lot of questions about, okay, what direction you're going to go? Is the Fed even capable of handling this? Do we need a new chairman? There's a lot of questions about this, and rightfully so. And they're the future for the market, and whether or not they're going to be behind the 8 ball again. So the short-term price action is indicating that they have everything that they need to see a further breakdown in the market here in the short term, which is testing that support level for Dogecoin at around like the 6-cent mark. Bitcoin, I think it's around like 28.5, I want to say. So these are going to be the next resistance points that they're going to gear up to try and get to break through. This is the period that matters when you start talking about buying the dip and increasing coin count and stuff like that. This is the time frame that matters, not when it drops 2%, stuff like that. That's why I made a video on how to properly buy the dip. This is the point at which you can dramatically grow your wealth. Keep that in mind and pay attention to the macros. I hope this video finds you well. Please like the video, share it with a friend. And if you want to support the channel, you can do that for free just by making sure that you are subscribed. I appreciate all of you. Thank you. And until next time.